Yeah. How concerned are you about Americans with their 401ks and pensions and retirement account in what I believe has been a very expensive stock market and overvalued stock market compared to the fundamentals? And I've been saying that the stock market's just been looking for any excuse. And really, the insiders seem to have kind of been running and heading for the hills, taking some profit on some of their positions.
I mean, it's really only 10% of the U.S. citizens that even own stocks in reality. Most people don't have the extra liquidity to make investments in almost anything. They're living paycheck to paycheck. Inflation's eaten most of everybody's lunch on stuff. We're starting to get some of that deflation, and that also has exposed itself in the stock market. If you want cheaper homes, if you want cheaper eggs, if you want the cost of living to come down, stocks have to come down along with that. They are directly correlated to the inflation across the economy. But I'm with you. I think, things are definitely overvalued. If you look at the Sharpe ratio or the Buffett indicator for the majority of these companies, a lot of the stuff that I learned back in school, and the reason I stayed out of the stock market until 2020 was mainly because those indicators showed that things were overvalued. And I think we're in, like we're talking about, we're going to see a large pullback in the market that's going to provide people opportunities. But if you are stuck with your 401k, allocated to whatever portfolio your company is providing you, hopefully you don't have a short-term time horizon. Right. If you are a bit later in life, we just talked to a couple yesterday about rolling their 401k into a self-directed IRA, should have 59 and a half. So they're able to do that. I would look at ways to be able to hedge that portfolio in the short term or start having conversations with your corporation or whoever manages those accounts. The way that traditional wealth managers just allocate stuff and, hope that it works.
I just want to add, for those who don't know, the 60-40 portfolio had its worst year ever. That was back in.
Yeah, traditionally stocks and bonds are inversely correlated. If one is underperforming, the other one goes the other way, but they've been directly correlated over the last 3 years here. And with the yield curve inverted, just a very strange environment in comparison to the last 50 years, which is what your wealth manager is going to show you. If you walk in, they're going to show you a chart back to the 80s, since interest rates have been coming down, and why this is going to be the best thing since sliced bread for the way they allocate your assets. But in reality, these cycles are much longer term, and we're at the end of a significant wealth transfer here. And I think those that have allocated to crypto and alternatives and are, working on ways to hedge against the volatility in the market, I'd look at the VIX. Probably if I was stuck in TradFi, I would have a pretty significant allocation to the VIX, because we're going to get volatility both directions, both up and down.